In this video, I'm going to teach you how to find the best opportunity in real estate in the Myrtle Beach market. Let's jump into it now.
I don't know if you're familiar with Eric Thomas, the hip hop preacher, but he had an opportunity to meet Warren Buffett and was kind of talking with him about just his morning ritual routine. And, Warren was telling him that he was reading, I forget the year, but we'll just make it up and say like the 1940 Business Journal or whatever. And it's like, why are you reading that? Because that year Ford was like at the top of his pinnacle. So he wants to know what Ford was able to do during those poor economic times to be at the top.
Yeah.
Because management is universal. Doesn't matter what the product is. If you can tap into the best practices of management and apply it to your situation,
Man. Solid right
yeah,
there.
so
Dude, how insightful is that, man? You
and
got me excited.
Yeah.
I'm sitting there, in my mind, I'm going, how can I get a hold of the 1940 Business Journal?
Right.
I'm like, because that's super insightful. Because if you can figure out, because in all honesty, there are people that have come before us, and the smartest thing to do for us is to start with their accomplishments.
Mm-hmm.
Because like if they've set a high watermark or a benchmark that we need to hit before we can think we're going to do something different. I mean, if we can't even do what the people came before us did, then that's a whole other topic. But I'm sitting here going, man, I need to go hold it, because how insightful would it be to know the factors to thrive in uncertainty and chaos and in a depressed market? If you can figure out what those guys did to succeed, well then shoot, you would think you'd have a leg up on thriving in a boom market.
Yeah.
Man.
And if it's good enough for Warren Buffett to go back and read that,
yeah, I mean, and don't think you're look. That's a whole other topic. Don't think you're smarter than Warren Buffett, and that you got an insight that he don't got. I mean, Come on now. I mean, get out of here.
You can't watch an Instagram reel and feel like you got more savvy than Warren Buffett. I'm sorry,
dude. That stuff goes on though. Yeah. People like legit like, I'm gonna do this, I'm gonna do that. And well, did you check with the people of our day that are known for being super successful at this? What are they saying about it? Did you gather information from multiple sources? And do you think you know better than the people that are actually making ridiculous bank at this? Anyways, okay, yeah. So that's a whole nother topic. All right, so. Now, and I really like this question. What controversial or unpopular advice would you give to first-time investors that challenges conventional wisdom? I'm going to dive in here. I'll take the lead on this one because okay. And then I want to hear your thoughts. So, recently on the show, I haven't put this video out yet, but I did film it already. I was just getting over fever, so I was sick, and I filmed this video anyways, and I want to refilm it because I don't feel like I did a great job, but I'm probably going to publish it. But I mean, I got amazing download and insight into investing in oceanfront condos. So my investors, I will have them pick 3 oceanfront condos. If you can't pick 3 oceanfront condos, then you don't know what you want.
Mm-hmm.
First off, like you got to send me your top 3. I'm not gonna do 10 ocean. I'm not gonna run numbers on 10 oceanfront condos. I'm not gonna take you to see 10 oceanfront condos. Like, you should know what you want down to a point. And because it's an investment, this is primarily a financial thing. Now, yes, there's gonna be some personal stuff to it. We should be able to go visit 3 oceanfront condos, and you figure out what works for you and what makes sense financially. First part of this.
Mm-hmm.
All right, so I will run numbers on those top 3. And I'll run all their operational expenses, their gross rental income. I'll go back into the MLS and I'll pull 2 years worth of what similar units at that exact resort did, and I'll pull all those gross rental income numbers. Sometimes it'll be 2 figures, sometimes it'll be 5, sometimes it'll be 7 or 10, right? Generally, I'll send them. I'll cherry pick just the very top 5 units, right, or the top 3 units or whatever, and so they'll look at the average gross rental income, and I'll run an average of it. So if the top 5 units had an average of $37,000, and then so that's at their one place, and then at their other place the top 5 units had an average of $47,000, and then at their third place the top 5 units had an average of $57,000, hypothetically. Well, they will want to choose the oceanfront condo that has the highest average gross rental income. Their thought process is, well, if other people are making money there, then I can make money there. What they don't see is that they're following that herd mentality and they're playing it safe, and they're going, well, if they can do it, I can do it. When technically on the flip side of that, they're positioning themselves against the people in the market that are the most savvy investors making the most money. And if you think those people are going to give up their market share so that you can make money, and they're already up and running, could be in business 5-10 years, and they're crushing it. Mm-hmm. And so basically, in order to find the hidden opportunity in the market, you've got to actually choose the resort that has the lowest average gross rental income, because you've got lousy competition. And for an investor that knows what they're doing, they know that they've got to do X amount of design work on the unit. It's got to have these colors in it. It's got to have these contrast themes. It's got to have a coffee station. It's got to have, it's got to have all these elements. For somebody that really knows what they're doing and is going to remodel their unit to be the best at this, they can go into the resort that has the lowest average gross rental income, and they can dominate that market, because you put a stellar unit with all that lousy average $30,000 a year, and then you got people. There's obviously demand there because people are renting they're there. So if you put a dope unit in a place where there's a bunch of lousy competition, that dope unit's going to be able to get a ton of income, and it's going to get a lot of demand, and probably to the point where your occupancy will go up so much that you can increase the price and charge a premium for it, because everybody else is lousy and nobody else wants to, so there's no competition. Mm-hmm. So technically, if you choose the place with the highest average gross rental income, you're giving yourself the worst probability of success, because you have entrenched competition that knows what they're doing. When you choose the place that has the lowest average gross GRI, you're choosing the place where there's the least amount of competition, and for a big shark, you're the giant now. Mm-hmm. You can come in and take a huge market share, kick everybody else's tail, and kick them out, or whatever. Anyways, the point is that conventional wisdom would say, well, if they're already making money there, if I go there, I'm going to make money too. Mm-hmm. When technically, the smart move for finding the hidden opportunity and building a strategic advantage for your own business is to go into the place with the least amount of competition, get a bunch of income coming in, make a lot of money, make it easier for yourself, give yourself the highest probability of success, and then now that you've got a 2 or 3 units there that are making bank, then you can go in and fight the big boys, because you've got steady money coming in, you build up a bunch of, you've got a lot of cushion. Now, conventional, so that's a piece of advice that would be considered counter conventional wisdom. It's controversial. Would that really work? Well, I'm telling you, it will work. And I actually ran through and did a case study on it. And the unit that was the cheapest saved you the most money on down payment. It had the unit that had the lowest average gross rental income was actually the cheapest unit out of all 3. It had the most appreciation out of all 3, had the cheapest down payment out of all 3. So technically, it puts you in the best position to make as much money as possible in appreciation, and it also sets you up to pay the least amount of money out of pocket. So I got more money for cushion and for my next investment. Mm-hmm. So technically, it was the hidden opportunity in the market that everybody's just passing right over. Now, I'm going to throw a quick caveat out here, because for some investors, and again, a lot of this is subjective, it's going to be dependent upon who you are, your personality, what you're interested in doing, what you're most fulfilled and passionate about, your risk level, your tolerance level. I mean, there's so many factors, so it's specific to every different investor. So think through this with me. I've got an investor client of mine, and she, in my opinion, thrives in competition. For her, the smart move is to pick where the competition is the most fierce, choose the highest average gross rental income resort, and invest there, because the competition brings the best out in her. She is very, very detail oriented. She's an executive. She's very, very focused. She's very, very, it might be safe to say that she's very, very driven, that what she does really, really well. And the competition causes her to rise to the occasion. So for an investor like that, if you're that type of investor, then you're probably going to want to invest in the place where the competition is the highest at the highest average gross rental income resort. If that's not the case, and you're not very detail oriented, you're not super driven, super focused, you're not like giving a lot of your time to this, then finding the hidden opportunity in the market might be the better alternative for you, because you got less competition. It doesn't have to be as granular. If that's not a good, it doesn't have to be as detail oriented in finding ways to make your unit stand out. That might be a better fit for you. If you want to see the full interview with Richard Garrett, click on the screen now.